stability. So it's like there's really no argument right now. And like until that dynamic changes, you're not going to see the Fed change.
And people, stop talking about pivot. Come on. Just kidding, just kidding. Steve Matthews, great story, economics reporter at Bloomberg News from our Atlanta bureau. So relevant to the discussion we're having today. You are listening and watching Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, everybody, you are listening and watching Bloomberg Business Week on this Wednesday. Hey, coming up, we're going to talk about Intel. We got this news late yesterday about planning thousands of job cuts. It all has to do with the PC slump.
Can I ask Mark some questions about Apple, too?
Yes, you can
okay.
do
We got
whatever.
Mark Gurman coming up in
This
just a
was
minute. We can't have
exclusive,
him.
wasn't it?
Yeah, we can't have him join us without talking Apple also.
I know.
Hey, first up, though, let's go over to Charlie Pellet because we got less than 90 minutes to go. Hey, Charlie.
Indeed, and green on the screen. Apple shares, by the way, little changed, up by about 1/10 of 1%. Intel among the chip makers up by 1.6%. AMD up by 0.9 of 1%. Nvidia up by 0.1 of 1%. What do all three have in common? They're all based in Santa Clara, California. The Dow, the S&P, NASDAQ are all advancing. It is a Fed Wednesday, a Fed Minutes Wednesday. Stocks are posting modest gains as investors weigh prospects for earnings growth, while the latest inflation readings keep pressure on the Fed to tighten policy. S&P up 8 now, a gain of 0.2 of 1%. We've got the Dow up 127, up by 0.4, and NASDAQ up now by 37, a gain there of 0.4 of 1%. 10-year yielding 3.90%. We have got the 2-year at 4.27%. Spot gold up 0.5 of 1%, $16.74 the ounce, and West Texas Intermediate crude down 2.4%, $87.22 a barrel. Bitcoin higher now by 0.6 of 1%, 19,134. The Federal Reserve is out with minutes of September's policy meeting, providing further insight on the central bank's war on inflation. And with that story, here's Bloomberg's Vinny Del Giudice.
We know Fed officials opted for another hefty rate increase at September's meeting. The minutes now add details, revealing officials are committed to keep tightening until inflation is back to the Fed's 2% target. In Fed speak, they're shooting for a restrictive level in the near term and keeping rates high for as long as it takes. Inflation is the worst in 40 years. Next Fed meeting, early November. Vinny Del Giudice, Bloomberg Radio.
And of course, CPI report tomorrow morning, 8:30 a.m. Wall Street time. Complete coverage as you have come to expect over the years right here on Bloomberg Radio. COVID-19 vaccine maker Moderna is up the most in 2 months after Merck said it would exercise an option to work in partnership with the biotech on a messenger RNA cancer vaccine. Merck shares down 0.5 of 1%. Moderna, based in Cambridge, Massachusetts, up by 7.8%. Recapping, 10-year yield 3.90%. S&P up by 0.3 of 1%. Intel up 1.6%. And that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, you know, all this week we've been talking a lot about the semiconductor area, really for the last few weeks, some concerns about the outlook, and this story certainly plays into it. We got this last night, a Bloomberg exclusive. Intel shares certainly, I think they were a little bit higher, actually, and this is on the news that the chip giant is planning thousands of job cuts to cut costs and cope with a PC slump.
We're talking some serious job cuts, too. This exclusive by our own Mark Gurman and Debbie Wu. We got Mark Gurman on the line right now. He's technology reporter for Bloomberg News. He joins us from our Los Angeles bureau, and if you're watching on YouTube, you'll be able to see him there as well. So, Mark, give us the details here, because, as I mentioned, we're talking serious job cuts potentially affecting about 20% of staff. What's going on?
Yeah, so if you are an Intel employee, this is bad news. If you are an Intel shareholder / investor, this is potentially good news. As Carol mentioned, the stock is up a little bit today, so there has been some benefit from this news there. These are going to be major cuts. I'm told that this is likely to be the largest layoff to hit Intel since 2016. At that point, they laid off, under former CEO Brian Krzanich, about 11% of the company, or 12,000 employees across the entire corporation globally. This is probably not going to be as big as that, but it is going to be something that requires some sort of major restructuring. I'm told the employee count is going to be in the thousands. Let's just face it, the PC market over the last couple quarters has slowed dramatically. Some of the PC maker shipment totals have, dropped 30 to 40%. You look at Lenovo, you look at HP, you look at some of the other PC makers that use Intel processors, you're seeing a drop off there. So clearly Intel's bread and butter, that's slowing down. At the same time, their profits are also shrinking. right? So it's not a good situation for Intel right now. They're reporting earnings on October 27th. That's their third quarter earnings. We are anticipating about a 20% year-over-year decline. Profit is down 15 basis points, right, from their usual measure. So they have to do these layoffs to really try to up their profit, up their gross margins, and that's why you're seeing the positive reaction from the stock. But obviously, we're talking about human beings here. We're talking about employees. This is not going to be a positive sight. This is going to be one of the bigger layoffs in the chip sector. Two companies that compete with Intel, Micron and NVIDIA, recently said they wouldn't be doing layoffs, but ARM, right, a key technology competitor to Intel, and Oracle, who competes with Intel on the server side, the data center side, they have seen some cuts recently.
Mark, awkward, as you point out in your story, this is an awkward moment for Intel because they lobbied so much for that $52 billion chip stimulus bill this year, and they talked about expanding chip manufacturing, semi-manufacturing here in the United States in particular, so not a good look.
Not a good look, but a lot of the damage is already done, right? They need, because they clearly have to cut their costs, they need to do something, and unfortunately, it looks a lot like that's going to come on the human side, right, with those thousands of cuts to employees. We're actually told that a lot of the cuts are going to come in their sales and marketing group, right? And that's typically where you see cuts happen, you know, initially in these types of circumstances, right? Marketing and sales. That's one group. It's called SMG at Intel. It's one mixed part of the organization. We're told cuts there could come as high as 20% of that division, right? But in terms of the general cut, company-wide, that number will be less than 20% overall. But, you know, sales and marketing, you're going to see a big hit there, unfortunately.
Hey, Mark, we got about a minute and a half left with you, and I wanted to touch on, among your latest stories, this one about Apple. Carol and I talked about this a little earlier. The company's planning to withhold its latest employee perks from its unionized store. What can you tell us about what's happening there, and put it in the context of the types of benefits that Apple does provide its employees?
So for 2023, 3 new benefits. One, tuition reimbursement is now going to be tuition prepay for some colleges, so Apple will pay in advance so they don't have to reimburse you at the end of the semester. Coursera, normally $400 a year for a subscriber online. That's going to be a free subscription now for Apple employees. And then the healthcare plan through United Health, that's going to get some improvements, waived co-pays for select doctors in regions like New York, New Jersey, Washington State, Connecticut, and a couple other states. Those perks not coming to Maryland, right, in terms of the Towson store in Maryland. That's Apple's sole unionized store, so they're going to have to negotiate if they want to get those into their collective bargaining agreement. This is interesting timing. What's happening tomorrow? Well, voting will now begin for a second potentially unionized store, this one in Oklahoma City. We'll see if this news has any impact there shortly.
It's like another volley, the back and forth with this issue. Mark Gurman, great reporting. As we mentioned, that Intel story, a Bloomberg exclusive by Mark. Mark is technology reporter at Bloomberg News, joining us on the phone from our LA bureau. And just to remind everybody, as Mark pointed out too, that Intel shares up about 1.6%, as he said. Not good news for a bunch, in fact, Intel workers, but investors certainly liking the news that they're cutting costs.
So much to this story, what's happening in the PC market around the world, and then, of course, also the CHIPS Act here in the U.S. Hey, let's get on over to World and National News, where Nancy Lyons is standing by in our 99.1 newsroom in Washington, D.C. Hey, Nance.
Thanks, Tim. Democratic senators are pushing for the U.S. to temporarily pause arms sales to Saudi Arabia after OPEC Plus moved to slash oil production by 2 million barrels a day. Experts say that could send gas prices higher around the world. Senator Richard Blumenthal of Connecticut says the Saudis don't deserve our help.
We are selling highly sensitive, advanced technology to a country that has aligned itself with an adversary, Russia, that is committing terrorist war crimes.
Blumenthal says the Saudis need to restore trust with the U.S. President Biden is in Colorado this afternoon, where he's designating Camp Hale as his administration's first national monument. It was an alpine training site where U.S. soldiers prepared for battles in the Italian Alps during World War II. Many troops who trained at Camp Hale returned to Colorado after the war and helped create the state's lucrative ski industry. The House January 6th committee is getting ready for what may be its final public hearing tomorrow, as we hear from Bloomberg's Nathan Hager.
The panel is expected to focus on repeated warnings former President Donald Trump received about the threat of violence ahead of the attack on the Capitol. Sources tell the Washington Post the committee will present new video footage and internal Secret Service emails that may corroborate parts of former White House aide Cassidy Hutchinson's testimony. She told the committee in June that the former president was told some of his supporters were armed and that he clashed with Secret Service agents who insisted he stay away from the march to the Capitol. In Washington, I'm Nathan Hager, Bloomberg Radio.
Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Nancy Lyons in our 99.1 newsroom in Washington, D.C. So we're just talking with our Mark Gurman about what's going on with Apple and benefits and those workers at the unionized store, not getting those benefits, and then they're getting ready, right, for a second vote at another store, whether or not those Apple workers want to be part of a union. We are seeing, after decades of union membership going down, we're seeing an uptick.
We are, and Home Depot among the latest examples. Yeah, I think interest is a really good way to describe it, Carol. Home Depot employees in Philadelphia are going to vote on November 2nd and November 5th on whether to make theirs the company's first unionized U.S. store. The election will be held in person on the company's premises under the supervision of the National Labor Relations Board, agency spokesperson Caleb Lotto said.
Workers will vote on whether to join a new labor group calling itself Home Depot Workers United, which petitioned to represent a proposed bargaining unit of about 274 employees at the store. If a majority of voters support the union and the NLRB certifies the results, the Atlanta-based home improvement giant would be legally required to negotiate over working conditions at the store. The union has said it aims to address issues with compensation, staffing, and workplace respect. Representatives, though, couldn't be reached for comment Wednesday. You know, it's happening.
It is happening. Listen to what Home Depot said in an email. Quote, our open door policy is designed to assure all associates they can bring concerns directly to leadership, and we have a track record of working successfully with our associates to resolve those concerns. While we will, of course, work through the NLRB process, we do not believe unionization is the best solutions for our associates.
You do wonder, right, the environment we've been living in where it's such, workers are in the driver's seat, right, when it comes to jobs, and I do wonder if some of that momentum is tied to that as well, and you do wonder if we start to see a downturn if some of that momentum goes away.
That's a really good question. Okay, so we have Apple and Home Depot. We also got Amazon, Trader Joe's, Chipotle, Starbucks as well, and around 250 cafes across the country have voted to unionize following an initial victory. That was last December.
All right, so we'll keep an eye on this, and of course you can find all the latest reporting when it comes to unionization. You can do that, find it on the Bloomberg terminal as well as at Bloomberg.com. You are listening and watching Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. The Dow, the S&P, NASDAQ are all advancing right now. Stocks are rising after minutes of the last Fed meeting showed officials are committed to tightening policy, but that calibration was needed. Treasuries rose, the dollar fell. UK markets roiled once again by confusion over the country's policies. So here's where we stand. The S&P up now by about 8 points, off session highs, but up by 0.2%. The Dow's up 124. That is a gain of 0.4%, while NASDAQ is up 36, higher now by about 0.4%. 10-year's up 13.30 seconds. 10-year yield 3.89%. The 2-year is yielding 4.27%. Spot gold up 0.4%, 16.73 the ounce, and West Texas Intermediate crude is down 2.2%. WTI 87.36 a barrel. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, the story that keeps on giving, and it isn't quite over yet. We're talking about Elon Musk's pursuit of Twitter, and this week in the upcoming issue of Bloomberg Business Week magazine, the cover story is about Twitter and how it faces only bad outcomes if Elon's $44 billion deal closes.
That piece by Kurt Wagner, he's technology reporter for Bloomberg News. He joins us on the phone from San Francisco this afternoon. Also with us is Joel Weber, the editor of Bloomberg Business Week in the Bloomberg Interactive Brokers studio. You can follow Joel on Twitter at Joel Weber Show and Kurt Wagner at Kurt Wagner 8. Hey, Kurt, I want to send it over to you to start with this afternoon. So you can't win. It's like you win. It's like there's no good outcome here is my big takeaway from your story, because the company has been so beat up over the drama. And if it goes through, then what does that look like?
Yeah, and that's, what we've been talking about for a couple months now is that, what is the end result here? And I think it became apparently abundantly clear, that no matter what happens, Twitter, the company, is in for a crazy ride. And, if Elon gets Twitter, as we are starting to expect, that's going to lead to layoffs, cost cuts. They're going to rescind a lot of the rules around speech and misinformation is the expectation. So, suddenly this service that's incredibly important is going to look and feel very different. And the company is going to look and feel different. Now, if for some reason this deal falls apart, suddenly you still have a company that, has spent the last 6 to 9 months just in total chaos, and they have to kind of pick up and try and pretend like nothing ever happened. And I just don't think that that's realistic either. So, the story was meant to kind of give people a glimpse into what the Twitter employees are feeling right now, which is a lot of chaos.
Tough place to be in. Joel Weber, the editor of Bloomberg Business Week magazine, also with us. First of all, can I just say the cover, and you made Elon nice pecs there.
Yeah, he's got some good biceps too. So Kurt, we've been talking about this for months. It's obviously probably one of the biggest business stories of the year, and I'm curious. One of the things that that you had in here was even some new stuff about what the employees really felt about their potential new boss. So take us there and sort of these slacks that you were able to get.
Well, there's two scenes that are in the book. The first one is from early 2020. Elon showed up at a Twitter offsite with the entire company, and he complained about bots. And, at that point, everyone kind of just sort of shrugged it off, like here's just a popular user who has an issue. Fast forward 2.5 years, and suddenly Elon is still complaining about bots, but now, when he addresses employees at an all-hands in June, the vibe is very different, right? It's no longer here's this outside kind of tech celebrity showing up to give us advice. It's here's the new boss starting to, lay down the future of the company. And employees were not happy. He alluded to layoffs. He alluded to other cost cuts, maybe getting rid of remote work, which a lot of people at Twitter have really come to enjoy. And so on Slack, they're basically mocking their soon-to-be boss as he's speaking to them. There's things like, hey, is it too early to get a drink? Like, this guy doesn't know what he's talking about. And, that just gives you a sense of, like, how unhappy a lot of Twitter employees are with this, right? That they would openly mock kind of the new boss during the opening Q&A with staff. And I just think that it's only going to get worse from here because there's a lot that's happened in the last couple months to make him even less attractive to a lot of Twitter employees.
Okay, so what you cut? He ends up. Let's say he has to cut this check, $44 billion, right?
Right.
Like, don't bounce that check. That would be unfortunate. He becomes owner of Twitter after all of this. What chess moves go down from there? Do we think?
Yeah, I think there's a few things. First and foremost, I imagine he's going to probably put in his own executive team. He's been pretty open that he has no faith in the current leadership at Twitter. We expect that CEO Parag Agrawal will probably be out. Also, the top lawyer Vijay Gadde will probably be out. So there's going to be new people at the top of this company. And then I think the other thing is he's talked a lot about wanting to bring quote free speech back to Twitter, right? And what does that mean? Well, for starters, it means reversing permanent bans. So we might see President Trump back on Twitter quite soon. We might see other people who have been banned back on Twitter. But I also think it sounds like he plans to get rid of a lot of the rules around harassment and hate speech and misinformation that Twitter has been building over the last couple of years. That's going to have a huge impact of what it feels like to scroll through your Twitter timeline, right? And I don't know exactly how quickly all that stuff can be unraveled, but I imagine, Twitter might feel very different to people in the next couple months.
That's a really interesting point, Kurt, and that's one I really wanted to hit on, because there's got to be a portion of people who think that this is a good thing. I've seen it play out on Twitter, and you see a lot of people say, wait a second, this is a good thing for Twitter because, this is going to be more about quote unquote free speech. So what else does it look like on the other side of this if this does go through? Does it actually attract more people? Does it become a more attractive platform? Or do those protections that Musk potentially takes away or could take away, does that hinder people's experience on it?
Well, what's funny is there was a time probably 3 or 4 years ago when Twitter was still very much struggling with all of this hate speech and harassment stuff. And there were people leaving, right? Like, hey, I don't want to be on this hell site. I don't want to, there were a lot of mean things said about Twitter, and people were saying that they were leaving, right? And then Donald Trump got this banned, and people said, well, now everyone's going to leave Twitter because they banned President Trump. And in both cases, the numbers didn't really reflect either of those things, right? Like it was mostly people complaining about this, but the majority of users stuck around. Now, in this case, I think that's probably the same thing that's going to happen, right? There will be people who are happy to see some of these rules rescinded. Some people will be very sad, but for the most part, I imagine most people will probably stick around, at least in the near term.
Hey, Kurt, one thing I'm curious about too, though, is, Elon Musk has a lot on his plate. Will he ultimately, have a deputy really, running things at Twitter? How do we anticipate it might play out?
Yeah, this is still an unknown. I mentioned that I think the current executive team is probably going to be out the door, but who does he bring in to run the day-to-day? It doesn't seem really feasible for him to do that considering his responsibilities at SpaceX and Tesla as well. But one thing he did tell employees in June, and that we mentioned in the story, is he said he doesn't really care much about titles, like is he the CEO, is he something else? But he wants to make the decisions. He wants people to listen to him, So I do think he's going to be pretty involved, at least in the direction of where this company is going. Now, is he the one who's going to be, answering emails all day about product tweaks? I don't know. It seems unlikely. But he does claim he wants to be heavily involved here.
I love the last line of your story about, I guess, what title or role Musk will be. And he says, I don't really care what the title is, but obviously people do need to listen to me.
That's right. Yeah. Who's in charge? The new guy.
All right. Great story. It is the cover story of the new issue of Bloomberg Business Week, which will be out on newsstands tomorrow, online already at Bloomberg.com/businessweek and on the Bloomberg terminal.
What's the over-under on whether or not that title has the letter X in it? Something that he's just totally obsessed with.
CEO X?
It's a whole new dimension for where Elon could go here, and you thought Mars was the last one. So.
Oh my gosh, and it ain't over yet.
Twitter, the final frontier.
All right, our thanks to Kurt Wagner, Bloomberg News technology reporter, and of course, Jill Weber of Business Week.
close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is Countdown to the Close. Just 60 minutes left in your trading session. Caroline Hyde, Romaine Bostick, Taylor Riggs. Sorry, Romaine. Romaine Bostick. I mean, I'm so excited about there being legs in the metaverse that I can't get over people's names. Carol Massa, Tim Stenovic are with us, of course, as we go TV, radio, YouTube, somewhere on the metaverse too. I'm looking...
And Stenovic, that's a harder name to pronounce, but you got that one right.
I'm just overwhelmed by the lack of
it.
volume that are in these markets that I can't get my words out.
Okay, good.
Oh my gosh, tough crowd. Listen, we're bouncing around on the equity trade. We know that even after those FOMC minutes, but I've been looking at the airline stocks because they have definitely showed some outperformance over the last couple of days. Up another 1.6% if you look at the S&P Super Composite Airlines. American, which we know up their guidance yesterday, continuing to move higher, up about 4% in today's trade. Then Delta, we get their earnings tomorrow, and that stock's up about 1.6%. So we continue to see some investor upbeat momentum into these names, Tim.
Well, let's go to some underperformance. The stocks just cannot catch a break. A fresh 52-week low today, underperforming the broader indices, down 0.8%, down for a fifth day in a row. And in that time, it's shed nearly $280 billion in market cap. It's not the full story, though, about what's going on if you peel back the layer and look at the movers in the stocks, because we should say that Intel is the best performer in there, up on that Bloomberg exclusive from Mark Gurman and Debbie Wu about the company planning a major reduction in headcount that could number in the thousands. I know Mark was on your air a little earlier. He was on our air as well, talking about that story.
I mean, really is just an area of continued pressure. Meanwhile, we're pretty much flat across the S&P 500 and the NASDAQ impact on the day. So big tech up only 8 points at the moment. We're up 65 points on the Dow, so that's up about 0.25%. But really, the S&P unchanged on the day after those Fed minutes, with volumes off by about 6%. The Russell 2000 is also unchanged. Look, we are in wait and see mode for CPI, it feels like.
And you're feeling that wait and see mode by a 50-50 split on the individual sector levels here. Take a look in the green. Energy back on top after being a significant laggard the last few days. You're up about 1%. Staples and discretionary are also in the lead as well. Pepsi, of course, looking at you when we think about some of those individual names. To the downside, Romaine, this is a very interesting story because bond yields are falling, and yet real estate and utilities are also the worst performers on the day. Typically, that's not something you see.
Yeah, not something you see here. And I do want to go back to Pepsi. I mean, those shares actually having a pretty good day, and it really kind of ratifies the fear, I think, of a lot of folks out there that some of these companies are going to continue with these price increases. Pepsi made it very clear here that its strategy going forward is to kind of maintain some of those price increases here in order to sort of blunt its own costs. That's good for investors. Shares up 4% here on the day. Maybe not necessarily for consumers. Speaking of which, take a look at Cinemark Holdings, down about 4% here on the day. An interesting downgrade over at Credit Suisse today, talking about how movie attendance overall, not just at Cinemark, but overall is not going to return to those pre-pandemic levels, and that investors need to adjust their expectations. Uber shares rebounding after the big sell-off from yesterday, up about 5%. And Meta Platforms down another % here on the day at 127.18, not down, back down to those sort of 2018 levels here as Mark Zuckerberg continues the rollout of the metaverse with legs.
With legs, with a $1,500 price tag.
Do you think those, how much of the legs cost?
Did you see that video, though?
I did.
Only Mark and whoever else he was with had legs.
Everyone else.
The audience.
Well, that's the power of having controlling all the voting shares. I mean, you get legs. The rest of the investors, you just get from the waist up.
If they can't give everyone legs, then I don't know.
Yeah. That's the breaking point for you, Tim. No metaverse for you.
Exactly.
All right.
Build it and the name will come. Meanwhile, I mean, sobering thought that not everyone has legs in the metaverse. A sobering thought on this great chart that comes from one Pete Diateris. We always thank him for it. Only 63 S&P 500 members are showing as oversold on the 14-day RSI scale. I wonder if Meta is one of them. But despite we've had 15 daily falls in the last 20, we got 9 of them where, what is it, over 1%? 10 of the days we've had more than 400 daily losers, but still only 63 S&P 500 members are actually technically oversold.
Does that give you worry or does that give you encouragement?
Worry, because, I mean, where's the capitulation? Where's the actual buy signal in that?
Did we already get it?
Yeah, we moved on. People bought the dip. I don't think so.
Well, that's certainly a question. No question, though, when it comes to pivoting, right? I feel like we got that in the FOMC minutes today. We certainly got it from Loretta Mester, president of the Cleveland Fed. She stopped by Bloomberg headquarters last night, talking with our Kathleen Hayes. She talked about the neutral rate, the Fed funds rate approaching neutral. She says it needs to be above neutral for a time to bring down inflation. So it means no pivot. Check it out.
The real issue is we need to do more. We have not seen inflation move back down, and we need to see that because leaving inflation where it is, if it continues, there's a higher chance that it does become embedded in the economy.
And of course, that's Loretta Mester of the Cleveland Fed, president there, speaking with our Kathleen Hayes last night. Neil Kashkari also out today saying the bar very high for a pivot to happen.
Yeah, I mean, we know this Fed is 100% focused on bringing down inflation, and that's why we're going to be watching those numbers so closely tomorrow. But, 8.1 from 8.3%, that's not really that substantial of a decline, and I think that's a serious concern.
And it doesn't bode well after the PPI numbers. I'm reading just the latest note from some of the economists and the initial reaction after that PPI data. Services is just continuing to be really strong. You're now up another 0.6% after a 0.4% increase last month. So you are seeing a little bit, at least on the good side, coming off a little bit. But the services side is still continuing to show some strength.
A little bit, though, but back to the good side. I mean, I was looking at a great write-up by the folks over at Bloomberg Economics who kind of talked about they're actually anticipating a little bit of a reacceleration, in, at least in certain goods like that, when we get that report tomorrow. So it'll be interesting to see sort of what the balance is.
And remember, this is after 4 or 5 months of oil prices coming down. What then if we've got yet more supply chain snarls, if we've got more antagonization between Russia and Ukraine, if we've got more oil price on the higher side, yes, it's down on the day, but the 17% run up last week, what does that mean for inflationary pressures, not just in the core, but outside it, of course?
A lot of variables out there, right? That could impact, the global inflation print going forward. I thought it was interesting in the minutes today. It said participants commented that they expected inflation pressures to persist in the near term. So maybe that's a little bit of a clue of what we might get in that CPI print. Nobody expects it to come down dramatically.
I got to use this opportunity to put in a plug for Steve Matthews, a profile of Jim Bullard from the St. Louis Fed. Any story that includes a bicycle is a story, as an anecdotal lead, is a story that has me.
Yeah, that was a great read. Definitely everyone check it out on your terminal.
Yeah, what was it? The fact that he overall tried to buy a bike and then they charged him extra for when it arrived. 4 months later, for me, it was the supply chain issue rather than the inflationally pressure too.
We all have that moment, though, right? Where we actually felt, but we all have that moment where we felt inflation actually hit us. We all have that moment, and you even have that moment if you're an official with the Federal Reserve.
That story reminded us that in January of 2021, core inflation was 1.4%. Right? Some perspective. All right, guys, we're going to be back in less than an hour's time. Our cross-platform coverage on radio, TV, YouTube will continue. We will count you down with Beyond the Bell, count you down to the close on this Wednesday.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you are listening and watching Bloomberg Business Week on this Wednesday. Carol Masser, Tim Stenovic. What are you thinking?
I'm thinking of something that Molly Smith just sent to me.
What'd she send
because
to you?
she is poring over the minutes from the latest Federal Reserve meeting. And you heard me make that comment about Pepsi and the idea that people could be trading down and spending money on less fancy snacks. Well, she heard me say that because she was in here, and she sent me this quote about, quote unquote, downshifting. Quote, these participants also noted that the composition of spending by low to moderate income households who were affected to a greater degree by high food, energy, and shelter prices was changing, with discretionary expenditures being cut and purchases shifting to lower cost options.
So those who have less to work with, essentially, is that what you're saying?
It's exactly what I'm saying. It's something that we heard from some of the, it is something that we heard from fast casual restaurants, right? We heard it from Chipotle's CEO, Brian Niccol, when we interviewed him. Gosh, Carol, that was a few months ago.
It was a while.
And he said people aren't going to as expensive of restaurants, and instead they're downshifting to Chipotle.
Right, so they stand to benefit from this. I mean, you do think about it, right? When you're dealing with higher prices persistent, if you don't also have, if your savings are being brought down, right, you've got to rethink about how you're spending money.
I went to the grocery store on the way home yesterday and scanned everything ahead of time before taking it up to check the prices, because, there's like 2 or 3 options of everything you can buy. And some price difference is $3.
Something like, plastic bags or garbage bags. It's like, do I really need a name brand? Probably not.
Definitely not.
You really do think about it. But if you want full coverage and full write-throughs on those Fed minutes, be sure to check out the story in the write-through. You can find that at Bloomberg.com and, of course, on the Bloomberg terminal.
Let's get a check of the latest world and national news. For that, we go to our newsroom in D.C. Hey, Nance.
Thanks, Tim. The Biden administration is considering a complete ban on Russian aluminum as a counterpunch to Russia's barrage of missile attacks on Ukraine. Today, NATO's defense ministers met in Brussels to discuss next steps in support of the war. Bloomberg's European correspondent Maria Tadeo with more.
The NATO Secretary General, he was crystal clear. What the country needs right now is air defense systems. It needs to be able to protect itself from the air. And in fact, if you look at some of the moves by the Russian army over the past 3 days, it seems we're going back to the old strategy. They're stuck in defending positions on the ground, so they move to the air. And there's a lot of damage that is done to Ukraine when you fight a war like that from the skies.
Bloomberg's Maria Tadeo. Senator Richard Blumenthal says Saudi Arabia has not only thumbed its nose at the U.S., but has given us a gut punch for leading OPEC Plus to cut oil production. He's proposing a 1-year pause in U.S. sales of all arms, repairs, supplies, and support to the Saudis.
The Saudis need to come to their senses. They have committed a humongous blunder, very much against their own economic and security interests, as well as ours.
Blumenthal also criticized Saudi Arabia for human rights abuses and the murder of journalist Jamal Khashoggi. President Biden has said there will be consequences for the Saudis, but he's not said what they would be. U.S. regulators say Pfizer and Moderna Omicron boosters are safe for young children. They've approved their emergency use. The Pfizer shot can be given to kids as young as 5. The Moderna boosters can be used for kids as young as 6. The FDA director will now need to sign off. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy, thank you so much. You are listening to Bloomberg Business Week. Carol Masser, along with Tim Stenovic, live in our Bloomberg Interactive Brokers studio. We've been having our Bloomberg team some great interviews with well-known folks in the investment space, and that included David Einhorn. You heard it with our Sonali Basak yesterday. He's the founder of Greenlight Capital. He was among hedge fund managers wagering on Twitter, and he said he believes that Elon Musk will go through with his deal to buy the social media company this year. It is the biggest long bet that he's made this year.
Yeah, here's what he said, quote, "It's pretty much the only sizable long investment we've made the entire year because we've been very cautious with the bear market." This, according to an interview that he gave to Bloomberg TV yesterday with Sonali Basak, as you mentioned, Carol. Quote, investing in something like Twitter, which I think will resolve this year, is good because I should get the cash out to redeploy into the next thing.
It's interesting, too, and we've talked about this, right? Certainly, I think with Arjun Grasso and others in the legal space, or Jeff Feely, right? Feely, excuse me, who's been covering it, the trial. But Einhorn said earlier this year that the laws tied to M&A, mergers and acquisitions, are clear, and that the Delaware Chancery Court would uphold the deal. Though Musk has tried to pull out of the purchase, he revived his bid in recent weeks at the original price of that $54.20 a share. But the law is the law, right? And when you have these, there's contractual obligations when it comes to things like this.
So how big is that investment?
Sizable.
That's right.
Einhorn.
He didn't disclose his full stake. He said, though, quote, "As for Elon's reputation, I don't believe it will be changed one way or another."
Yeah, so it's interesting to think about, when all of this is going on, and we talked with our Mark Gurman, about the changes potentially to come at the company, the impact on employees, but at the same time, it's an investment play in a big way, especially because we've seen movement in this stock.
Yeah, speaking of movement in the stock, shares bouncing around a little bit. They are flat right now, but they were lower earlier, and exactly flat. $50.06, Carol, so shy of that 54.20 figure.
Just did a quick scan, the holding function.
Yeah.
I don't see Greenlight Capital coming up. So
quarterly, right?
Yeah, that's true. So maybe it hasn't been updated.
Yeah.
All right, you are listening and watching Bloomberg Business Week on Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. Another choppy session. The S&P does remain lower. Both the Dow and NASDAQ are higher. Let's get all the details as we head right over to the First Word breaking news desk. And here he is with the afternoon call, Bill Maloney.
And good afternoon, Charlie. U.S. stocks in a quiet tape today, with the Dow currently up 61 points. S&Ps are a little changed, and NASDAQ is higher by 10. The U.S. 10-year yield at 3.91%. Gold is up 7. Energy is in the red, and Bitcoin is higher by 0.5%. Among the main 11 S&P sectors, leaders were energy, consumer staples, and consumer discretionary. Utilities were under pressure, and leaders to the upside in the Dow, J.P. Morgan, Coca-Cola, and Intel, while Walgreens led to the downside. After earnings, Pepsi rose 4%, and in other news, the USDA said that the Florida orange crop to be the smallest since 1943 due to the hurricane, and the White House weighs a ban on Russian aluminum. Wrapping things up, Duck Creek Technologies reports after the bell. Live from the First Word breaking news desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill Maloney, and to hear live breaking news overview of Bloomberg type Squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, Charlie, thank you so much for that update. Hey, we just talked about airline, or I did, airline stocks, really some outperformance today. The rally in American Airlines alone, up again and up around 5% in the past 2 trading days. The U.S. carrier yesterday lifting its forecast and its guidance above prior guidance. American officially reports next week, so does United. Meantime, we've got Delta reporting tomorrow.
All right, for a roundup of what to expect from airlines and already what we've heard, we turn to Colin Scarola, equity analyst at CFRA Research. Colin joins us this afternoon on the phone from New York City. So, Colin, as Carol mentioned, we've already heard from a pre-announcement from American Airlines. What does that tell us, what we learned from American yesterday? What does that tell us about what to expect across the wider industry?
Well, thank you for having me, first of all. Specifically as it relates to Delta's earnings release tomorrow, I think what the American numbers tell us is that the pricing across the industry, ticket pricing, is held up really strong. We haven't seen that sort of trend.
Anyone who's tried to book a flight anywhere realizes that, right? I mean, it's like we're trying to decide if we drive for Thanksgiving or fly because it's so expensive, Colin.
Right, and I think what a lot of sort of industry watchers were expecting was that big spring wave of booking would drive up the prices, but then they would start trailing down a bit over the summer. But it's been, from American standpoint, and I expect it to be the same for Delta tomorrow, it's been great for them to see that the pricing really isn't coming down because maybe they're seeing a little bit of trailing down in domestic, but as they bring those international flights back, you see the brand new, that first big booking wave hitting the international markets, and that's keeping, I think, overall pricing very strong.
I feel like everybody, Colin, right now is going overseas. I mean, I hear everybody talking about, we talked about Katie Greifeld, she's overseas right now. Everybody seems to be
She's probably listening right now because she just can't take a break. She's
tweeting about it.
She's tweeting a lot too.
But Colin, what I'm wondering is, so what are the big macro dynamics? Is this just a case of people who were stuck in their homes during the pandemic buying stuff they probably didn't need, and now they're going out just kind of enjoying life and being back to normal and experiencing things? Is it that? But is it also reduced capacity, reduced workers, and so it's just kind of supply-demand dynamics at work in the airline industry?
Yeah, it's a little bit of both. So you get unusually high demand with unusually low supply, and that's where this sort of 25-30% increase in pricing comes from relative to 2019. And just a few anecdotes. I think we have a record number of weddings happening in the U.S. this year and next year. That's the type of thing that's driving that leisure travel demand, plus the vacation demand getting to Europe, wherever it might be that people used to love to go. And then what's good to see for the industry is we saw the consumer and the households have that huge pent-up demand streak this spring and summer. And I think now we're starting to see it from businesses as well. You look at a lot of the accounting and consulting firms who used to have people out on the road working at client sites 4 days every week, that sort of Monday morning, Thursday night travel routine. That seems to be coming back in a pretty big way now this fall and into this winter. So what started with the pent-up demand on the consumer and leisure side, that, it's still strong. It hasn't run its course. It's still very strong, but it's certainly not growth anymore, I don't think.
Right.
But now international and business are starting to see that same sort of big pent-up demand wave. So overall, very good things for the airlines, and they look like extremely cheap stocks to me generally.
That's
with how strong demand is.
Colin, do we ever see business travel resume to 2019 levels? And I ask because a friend of mine is an event planner for companies. She plans conferences, and she was saying it is so much more economical to do these virtual conferences. The lead generation that we get per cost is just so much better. It's so much lower. And she's like, I don't see us ever going back to what we were doing before the pandemic because it was just too expensive.
Yeah, it's tough to make a call on that. I hear pieces of information like you just relayed, but then I also hear from a lot of surveys on businesses that you just can't replace face-to-face interaction. And I think my view tends to lean towards that it will come back bigger than it was. American Airlines specifically, they reported on small and medium business revenues, they were actually up 10% versus 2019 in the past Q2. So already small and medium businesses seem to be putting in greater demand for air travel than they were before the pandemic. And it's not a given that corporates, the larger corporates will follow that same track.
Right.
But I certainly think that's the most likely outcome just because I think people want to get back to seeing their clients and seeing their coworkers.
Hey, Colin, not to be a Debbie Downer and just got about 30 seconds. I just want to squeeze in. If we go, though, to a downturn, or maybe we're already in it, but if something protracted happens, certainly into next year, are the airlines in good shape to weather it? And again, just got about 30 seconds.
Yeah, I think a recession would not hit the airlines as acutely as it has historically because of the pent-up demand factor. So a recession, in my view, is hitting goods-producing industries, whereas services like air travel will hold up pretty well because there's that natural offset from the pent-up demand.
All right, well, good to know. Hey, Colin, thank you so much. Colin Scarola, equity analyst over at CFRA Research, on the phone in New York City. Don't forget, American United next week, and Delta reporting tomorrow, I believe, more in the morning. And, yeah.
I got to get those tickets for Thanksgiving. It's
Fine
cutting
now.
it close.
Hurry up, or you're going to be driving.
Too expensive.
This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Pepsi or Coke? What do you prefer? Or neither?
Wow, that's a tough one. Coke. If
Me
it's
too.
if
I'm a
it's
Coke
like
person.
a rare Coca-Cola.
I don't really drink
on a hot
cola
day
anymore.
But do you go Frito-Lay?
I've had some Fritos from time to
Fritos? You probably drink stuff and you
I
don't
will
even know.
neither
Pepsi.
confirm nor
You
deny.
probably drink stuff and you don't even know Pepsi owns it.
That's a good point. All right, we're going to talk Pepsi earnings because investors certainly like the results. We'll get to that in just a moment. First up, though, back to Charlie Pelley.
Hi, thank you very much. And here's what's going on. We've got the Dow higher, NASDAQ higher, S&P remaining in the red. Key takeaway, though, little change. Do want to begin, though, with a headline from the Bloomberg Professional Service. TikTok parent ByteDance is planning a music streaming expansion. This according to Dow Jones Developing Story, but we've got the headline for you right now on the Bloomberg Professional Service. Equities are trading mixed. 28 minutes to go ahead of the closing bell. Let us begin, though, with the 10-year yield, 3.90%. 2-year yielding, 4.28%. Stocks are moving a little change right now. At least that is true for the S&P. We've got the price of oil moving lower by 2.5%. West Texas Intermediate crude at $87.14 a barrel, down now by 2.5%. Spot gold up 0.5%, 16.73 the ounce on gold. As for the NASDAQ 100 index, up now by about 0.2%. The NASDAQ 100 index at 10,807. Well, tomorrow morning we get the latest consumer price data. Will be very closely watched. That number breaks at 8:30 a.m. Wall Street time. Complete coverage and reaction here on Bloomberg. ADP chief economist Neela Richardson says that CPI reading may not bring much change.
There's too much uncertainty in the world. So we might see a little bump up and down in that core read, as well as the fact that it could stay at the levels of that it could plateau for a while. So I'm not expecting major changes this week.
Bank earnings will be front and center on Friday when J.P. Morgan Chase, Citigroup, Wells Fargo, and Morgan Stanley kick off their industry's earnings reports. Shares of the banks are higher right now. J.P. Morgan Chase up 1.9%, Citigroup up 1.5%, Wells Fargo up 1.3%, and Morgan Stanley little changed, up by about 0.1%. So again, recapping, S&P little change, swinging between gains and losses. Just might snap a 5-day losing streak with the S&P up now by 1 point, up by 0.1%. After earnings, PepsiCo up 4.3%, Coca-Cola up by 1.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. As you just heard from Charlie, shares of PepsiCo, they are rallying today, and that is on the back of what we got from the company lifting its outlook, drink, snack sales, bucking inflation, meaning the company's still able to hike prices to battle inflation. So it was a strong quarter.
It was. And to help us understand what specifically was strong about it and how we can read into Pepsi's results for other companies, we've got Gerald Pasquarelli joining us, Senior Vice President of Equity Research at Wedbush Securities. Gerald joining us on the phone from New York City. Good to have you with us this afternoon, Gerald. Really appreciate you taking the time. What did we find out from Pepsi about the strength of the consumer? Because they were able to raise prices and people paid.
First of all, thanks very much for having me. Excited to be on the show, and it was a great earnings from Pepsi. I think that when you look at the leading trends heading into earnings, which are typically going to come from scanner data, Nielsen or IRI, what you saw was just a continued strengthening of growth across really cold beverages as well as snacks. With Frito-Lay and for Pepsi, that accounts for over 40% of their total company profits. And the salty snacks data has just been fantastic. They're back to gaining market share, and they're actually in scanner data doing over 20 points of price. And so we thought it was going to be a good print. They delivered a good print. And what you really saw was price-led revenue growth across most of these segments, which is really not only driving a strong top line, but it's helping to protect against these outsized levels of commodity inflation. And it was really strong across the board when you look at all of their segments.
I just want to make sure I heard right. Frito-Lay and PepsiCo, you said, are 40% of the profits. So you're talking about PepsiCo, that brand, and then it's Frito-Lay brand?
So Frito-Lay is a segment within that Pepsi reports on, and that segment in particular, Frito-Lay North America, is 40% of total company profits. So it's meaningful. It's the biggest profit driver. And when you're getting 20 points of price mix, and they actually reported 20 points of price mix, which is kind of in line with what we've been seeing in Scanner, you're going to have good profitability.
Okay, so far so good in terms of having the ability to raise prices. As you know, the macro conversation, we often talk about, the Fed continuing to raise rates, the prospect of recession, what kind of recession it would be. How much more can PepsiCo do something like this?
Yeah, I think that as of right now, pricing remains robust, and the the demand elasticity, so the volume impact has been relatively muted, which is encouraging. I don't think anyone's expecting this strong double-digit pricing to persist, and if you kind of look at where consensus estimates were for 2023 heading into the quarter, they're expecting a normalization to the mid-single-digit range, and so I think as you get more through the fourth quarter and then into 2023, you'll likely see a normalization in this pricing, which in turn should result in some better volume throughput as part of the revenue algorithm. But as of right now, these are essentially lower price needs-based products, which is one of the benefits in the current environment, is that consumers need these products, and they're relatively low price, so you can generate pretty meaningful price mix.
Hey, Jared, what about when it comes to Coca-Cola and what this means for Coca-Cola? Because there's no Frito-Lay equivalent at Coca-Cola.
There's not, but encouragingly, I did mention Frito as a segment that was delivering strong pricing, but Pepsi's getting strong pricing in cold beverages as well. And when you look at some of the trends for Coke, Coke's actually getting the best price mix because they are the market leader within carbonated soft drinks, which is the most important category for them. So I think that this is definitely a positive read on Coca-Cola. Even though they don't have a snack segment, we would expect this strong pricing that we've seen for Pepsi to persist with Coke as well as Keurig Dr. Pepper. One thing to note about Coke, the shares have definitely sold off. I know there was, broad market pressure over the course of the month of September, but these shares did sell off more so than some of the other non-alcoholic beverage peers, and that's largely due to currency and some concern around the European consumer. I'll just tell the audience that Coca-Cola is 66% international.
We have to think about the global component, the currency component when it comes to something like Coca-Cola, which is up more than 1% on the back of that PepsiCo news. Gerald Pasquarelli of Wedbush, thank you.
Let's get to world and national news with Nancy Lyons in our DC newsroom. Hey, Nance.
Thanks, Tim. The Biden administration may be ready to take serious action against Russia over its recent escalation in Ukraine, and it could have major implications for the global economy. Bloomberg's Nathan Hager reports.
The White House is considering a total ban on Russian aluminum. It is a move that has not been considered before, since aluminum is so important in everything from cars to skyscrapers and iPhones. Sources tell Bloomberg News 3 options are on the table: an outright ban, tariffs so high they'd amount to a ban, or sanctions on Russia's main aluminum producer, Rusal. Russia is second only to China as the world's biggest aluminum supplier. A ban could leave consumers in the U.S. and elsewhere scrambling to find a replacement metal. In Washington, I'm Nathan Hager, Bloomberg Radio.
NATO defense chiefs met in Brussels today to discuss how to better protect critical infrastructure, ramp up weapon production, and maintain support for Ukraine. U.S. Defense Secretary Lloyd Austin spoke of Russia's recent bombardment of civilian targets in Ukraine.
The whole world has just seen yet again the malice and cruelty of Putin's war of choice, rooted in aggression and waged with deep contempt for the rules of war.
Austin told them that The U.S. aid to Ukraine now totals nearly $17 billion. New evidence on the impact the pandemic had on students. Scores on the ACT college admissions test by this year's high school graduates hit their lowest point in more than 30 years. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Oh, only if you could see behind the scenes, the crazy stuff that goes around.
It's not us, Carol.
It's me, actually.
Oh, okay. Yeah, just to
Who likes to
clarify.
do audibles. Hey,
You know what producers love? When you change your mind with
Last
5
minute.
seconds. Yeah, with 5 seconds to go.
Sorry, I'm like doing a show
I don't
here.
even know where this story is.
Putting on a
Okay,
show
you start.
here.
I'll find it.
Okay, so I think I just sent it to you.
Okay, oh, great. Okay, good. Everything's okay.
All right, folks, don't worry. We've got everything under control. So we just talked about the airline industry just a little while ago. We've got Delta Airlines in the morning. We've got American and United next week. American, of course, pre-announced really yesterday. So Dow Jones, Wall Street Journal has a story out that frequent flyers who grew accustomed to relaxed rules for reaching elite airline status during the pandemic. Well, now carriers are raising the bar for earning rewards, leaving casual travelers with little recourse. I've been kind of waiting for this to happen.
Well, you and I are not those who have status on these planes, right? You don't have anymore.
I think I still have status.
You do?
Yeah.
What,
Like they've carried over some good, like if you
Okay.
had status, sorry, Tim.
Yeah, well, that's why I guess you get on first, and I'm just like stuck at the back.
I'm like, see ya.
Yeah, that's true. So as work in international travel dried up 2 years ago, airlines made it easier for people to maintain and earn status. This was a bid to retain their business. So that meant the number of customers enrolled in loyalty programs ballooned. It made it harder for flyers to attain perks like upgraded seats and lounge access.
Yeah, the problem is, according to the chief executive of the Brewery Group, it's a consulting firm that focuses on customer loyalty programs. He said the problem right now is there are just too many people with the status. Now, last week, Delta became the latest carrier to raise the bar on how much money customers must spend to reach the highest tiers of rewards, following a similar change implemented this year by American Airlines. I mean, they're getting tougher about this.
Yeah, for those who have continued elite status, the changes stand to free up access to first-class upgrades and other perks. So it's better news for those people who've flown a ton in the last couple of years. Those who are now at risk of losing status say it might not be worth the hassle to start from scratch building up miles with a new airline. Instead, some flyers say they might be scrambling to spend more on credit cards or buying pricier seats to qualify. We should have had Charlie Pellet come in on this one.
Yeah, we need him to weigh in on this.
Yeah.
Like, is it getting tough? Because he really knows how to work around this system. All right, you're listening and watching Bloomberg Business Week.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell with the Dow, the S&P, NASDAQ 100 index all advancing. Any move higher today on the S&P will snap a 5-day losing streak. S&P right now up by 2 points. Little change there, up less than 0.1%. We've got the Dow up 85, higher by 0.3%. NASDAQ is up 24. That is a gain of about 0.2%. Key takeaway, little changed on the S&P, but right now we do have green on the screen. A brief afternoon advance faded. Investors are bracing for tomorrow morning's reading on consumer prices. That number will drop 8:30 a.m. Wall Street time. Complete analysis and reaction right here on Bloomberg Radio. 10-year yield 3.90%. The 2-year yielding 4.28%. Right now, gold is up 0.5%, $16.75 the ounce. Bitcoin up 0.8%, 19,164, and a retreat for crude oil. West Texas Intermediate crude down now by about 2.5%, 87.09 a barrel on WTI. Recapping, S&P just turning negative, little change, down by half a point. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. It's 3:49 on Wall Street.
The following is an editorial from Bloomberg Opinion.
This editorial was written by the Bloomberg Editorial Board. By early next year, the U.S. government will likely run out of money to pay for COVID-19 vaccines, tests, and treatments. Although President Joe Biden has requested more support from Congress, Republicans are in no mood to continue spending on the pandemic. Shifting more costs to the private sector makes sense, but some level of government funding is still necessary. Lawmakers should agree on a more limited approach that ensures the U.S. is still prepared to fight the next pandemic. That means, for example, that Congress should continue to authorize funding for basic research, the development of new vaccines and therapeutics, and manufacturing capacity. In ways big and small, the U.S. is moving on from COVID. With a bit of foresight, the federal government should be able to manage this transition while keeping Americans safe. This editorial was written by the Bloomberg Editorial Board. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPIN Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Gotta love on this FOMC Minutes Day. We're watching markets bounce around, getting ready for an inflation print. And you know what we're talking about? Eddie Murphy.
Yeah, a little blast from the past. But we're really pleased this afternoon because we've got Victoria Green. She's Chief Investment Officer at G Squared Private Wealth. She's with us right now in the Bloomberg Interactive Brokers studio. Interviewed you like a dozen times. Never met you in person, Victoria. So welcome back to New York. It's good to have you here. What brings you to the city?
Some of it was just to do a little bit of work and have a couple meetings. And then obviously I hadn't met a lot of my Bloomberg friends in person, so I want to come say hi and meet everybody. So it's been great. By the way, your free snacks, amazing.
We do have good snacks here.
They're really, really good.
You can take some to go home, too.
We have to work now?
Yeah, exactly. Unfortunately. But you're almost done. Give us some clarity. We got Fed minutes today. A reminder, no pivot. They're going to keep raising rates. We did see some bounce off the lows in terms of equities, but we're really little change ahead of the inflation print tomorrow. So how do you look at this market? What's a constructive conversation to have right now?
I think it's too early. I still see some downside risk. I think the print
Too early for a pivot?
Too early for a pivot. I actually have been saying the pivot is dead. So everybody that's hopeful for a pivot is like wishing for like that sold out toy on Christmas. I really don't think you're going to get it. Like, I'm sorry. I wish I had better news, but I don't think it's coming.
At some point they're going to pivot. At some point they're going to stop raising rates, right?
Yeah.
At some point they will.
And at some point, the Dallas Cowboys are probably going to win the Super Bowl again.
Are you saying you never expect the Fed to, like, come on?
Seriously, though, it's a good question. It's also a good question, I think, for people who are thinking about buying a home right now. If they say, okay, well, I get locked into a 30-year mortgage, 7%, interest rates aren't going to be high forever, so maybe I could refi in 5 years. But is this the new normal?
No, I do think so. If you look at what the Fed funds futures are pricing in, it comes down rather rapidly in 23 and 24.
Right.
So I think, though, nothing this year. They talked about we rather do too much than too little. I think very shortly they're going to have to switch from we need to do too little, not too much, because this delayed reaction of a Fed.
I feel like the momentum was there. I think that was in the FOMC minutes today, that they're more concerned about doing too little rather than too much.
Yeah, and at some point they're going to be much more concerned about, hey, we did too much. We need to back off. I don't think we're there yet. That's my thesis. We've got a little bit more downside. The Fed's not bailing us out. At some point, and it was a little Machiavellian how we rallied on the UK problems that we had, because everybody said, oh, it's going to get so bad, it's good. We're just not there yet. We have the data points from labor markets still too tight. Pepsi came out with great earnings. Like, there's stress, but there's not
Intel
stress.
came out and said it's cutting thousands.
They are, and the tech sector is one of those that we say avoid right now. Like, look at the chip market, for months now, oh, it's attractive, but then you keep getting bad news on PC sales, and and that sector, like, just because a stock's down 50% doesn't mean it can't go down another 30, and you've got so many macro headwinds.
Okay, so what's an investor to do in this environment? If you're saying the pivot is dead, it's too early for a pivot at this point, when do we see a bottom here?
It's 34 to 32. I don't think we're that far off, but mostly because of multiples. Earnings have remained rather robust. I don't think 240 is kind of the average street for next year. I think that's still a little bit too high, but even if we're flat at 225, 3,400, that gets you a 15, 16 handle. That's not a bad place to be looking, but stay defensive. The biggest thing an investor can do is don't panic or don't knee-jerk on data. We've seen wild moves off of some of these data releases or Fed moves, and a lot of times it's a 1 or 2 day move and comes back to trend. So I would say, like, 1 day, 1 week does not a market make. Like, be a little bit patient, and then if you've got equities now, unless you're worried you have a zombie or something that's going to completely blow up, it really just hold on to it. And we talked through a little bit cash and liquidity. Dividends are great right now. You've got Tara versus Tino because you have all.
So you wouldn't be moving aggressively into cash at this point?
No. I think you gotta know when to hold them, know when to fold them. And at this point, you gotta hold, unless you have something that's a credit risk or a blow up risk.
What's a credit risk right now? In your view?
I mean, talk about the Russell 3000 and some of the zombie companies in there, or I would say not to pick on Cathie Wood, but some of the ARK fund, like the innovative stuff, the cool stuff that did so well for so long. Right now, typically smaller companies, higher leverage, no real earnings, and they're raising capital. That's not a good place to be during times of stress. You want quality, you want cash flow, you want a balance sheet that can absorb some problems.
Which is why you like Costco. And you several times have come on and you say you like Costco, and I was just looking up, is it like up about 13% this year? I know. Down 17% this year, but I think it's had a nice little bounce from its recent low, up about 13% or so.
So the big reason,
Well, I was just going to say the S&P 500 down 25%.
Correct.
Yeah. So I like them. They make about 75% of their revenues from the U.S., and then they are international, but the remaining, like majority in Canada, which the Canada.
So no strong dollar problem.
You have a little bit dollar problems too. All of this inventory problem that Nike and Amazon and everybody have benefits a store like Costco, because they're happy to buy things cheaply from Nike and resell it at Costco. They're not beholden to any brand other than the Kirkland brand, which is amazing. But so they have this purchasing power that other companies don't have. So Nike has to sell. Nike has to get their things off, and so you have a company like Costco that can buy some of the inventory pretty cheap and then resell to their members. They have such a loyal member base.
They do.
And then when you're looking to stretch your dollar,
higher socioeconomic too, higher in terms of their consumer. I don't know who's their.
I think it hits around.
I got to tell you, this is not like Texas, Victoria. We don't have room for 200 rolls of toilet paper in our apartments in New York City. So we're not the Costco shoppers.
I figured you guys learned from the pandemic. You would have a toilet paper closet.
She's got a basement full of toilet paper. So if you ever run out.
No, Tim and I did have a solution for the lack of toilet paper problem.
That's a different show. Hey, let's move on to United Healthcare before this gets too crazy. Why are you so bullish on United Healthcare?
First off, they have some great pricing power. I I mean, anybody who's about to re-up their insurance premiums next year, they have this ability to say, oh, we made record profits. But no, they do. They've got pricing power. They're again, they have a lot more in the U.S. I also think technology-wise, with some of the acquisitions they've done, they are looking at other parts of the market, getting into the pharmacy and the telehealth. And, that's a little bit like Teladoc used to be the darling, but then you have the big boys getting into it, and they're developing their own programs.
I love that you still love energy. I mean, it's hard not to if you look at the super mega uber outperformance of energy this year, and it just kind of continues. Cheniere is one name. Just got about 20 seconds. Why that name? Up 66% so far this year.
Sorry?
Cheniere.
Oh, Cheniere's great. So LNG exporting, we are going to win what Russia loses. So they're they have the biggest ports, well-run company, and they have the ability to expand. So as Russia backs out, Europe's looking for natural gas. They're the best position. They're also a very, very well-run company, and they have the biggest ports and terminals to get it out there.
Great stuff. So fun to have you in town. Come back soon. Safe travels home. Just going to go back to Texas. Victoria Green, Chief Investment Officer at G Squared Private Wealth, here in our Interactive Brokers studio. And folks, we just have a few minutes left in today's trading session, just about 2.5 minutes. We're bouncing around off our highs and lows. Slight gain on the Dow and the NASDAQ, slightly lower on the S&P 500. Coming up next, we're going to be joined by a Bloomberg TV team for Beyond the Bell. It is live on Bloomberg Radio, Bloomberg TV, and YouTube. We are counting you down to the closing bell on this Fed Wednesday.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Carol Hyde, Skylar Riggs counting you down to the closing bell. Here to help take us beyond the bell. It's our global simulcast. We're joined right now.
52 minutes to do that.
Believe me, I've been planning this. I haven't been paying attention to any interview over the last 15 minutes. We welcome in.
Bears a grudge or anything.
No grudge at all. Anyway, a happy hello here to our global simulcast partners, Tom Stenovic and Sarah Master.
Well, Roland, it's so great that you welcomed us in. I've been continuing to look at the airline industry, some outperformance there. It's up about 1.6% as a group overall. Of course, we had American pre-announcing yesterday. We're going to get Delta tomorrow morning, and we're going to get lots more earnings next week. But again, outperformance. Roland, did you notice that?
Well, I'm going to bring it back, okay? We just had Victoria Green in here in the studio, Chief Investment Officer at G Squared Private Wealth. It was great to have her. She should have stuck around for the simulcast. That would have actually been pretty fun. She said, too early for a pivot. The pivot is dead. Not forever. She thinks the Cowboys are going to win a Super Bowl before there's a pivot from the Fed, though. 3,200 to 3,400 could be the bottom, she said.
Horrible. Aren't they 3-1?
I mean, when I was a kid, Cowboys were the team.
Yeah,
they were the team.
Yeah, let's not start.
I don't think they're that bad this year.
Yeah. I love Taylor's newly earned sports aficionado.
I got married and now I have to do sports. Should we do yields?
For life.
Bond yields, anyone? Take a look at where we are, Tim. Didn't mean to cut you off either. Bond yields.
Apparently the Cowboys are pretty good. I'm learning right now.
Oh, boy.
Did I? I don't know.
Bonds are catching a bid. Yields are down 5-6 basis points across the curve, but not giving a boost.
And you take yields at him. Is that how it's a match made in heaven?
Match made in heaven here in the market. So we're going to try to get back on track here. But honestly, you're not really missing a whole lot.
Roland.
Yeah, I'm always to blame here. Look, the Dow Jones Industrial, you sound like my second grade English teacher. Dow Jones Industrial Average going to finish the day in the red. It actually been in the green for a good portion of the day, as were some of the other indices, but pretty much everything across the board in the red. The Dow Jones Industrial Average down 0.1%, S&P down 0.3%, the NASDAQ down 0.1%, and the Russell 2000 going to finish the day down by 0.3%.
All right, bouncing around on those major equity averages. For the S&P 500, though, it was definitely a bearish tone. 346 names lower on the trade today, 156 higher, Taylor, 1 unchanged.
The Dallas Cowboys are 4-1. There you go. Better than a 3-2 record. So take that, Tim.
I'm listening.
Your Niners are doing okay, too. Let's take a look at where we are on an individual sector level.
This has become a sports show. What's happening? We're like ESPN all of a sudden.
Food and beverage, as we think about some of these inflationary concerns, are up about 1.25. Energy, banks as well. We've talked about lower yields. Typically not what you would see here with the banks, but continuing to be a decent outperformer. Household products as well, Carol. Again, as we're really looking at some of those inflationary pressures, who can pass on those costs to the consumer and who cannot. Take a look at where we're down for some of the losers, Carol. Real estate, capital goods, utilities, actually typically not what you would see when yields are falling, but nonetheless, you do have have real estate and utilities. Some of the worst performers are off about 3.5% for those sectors.
All right, let's get to some of the individual gainers. We've all talked about it a lot. PepsiCo pretty much holding on to almost all of the day's gains, finishing up 4.2%. We've seen it top among the names in the S&P 500 and NASDAQ 100 today. Company lifting its outlook. Drink, snack sales, bucking inflation mean the company's still able to hike prices to battle inflation. Company also beat profit estimates for the third quarter, so that was a standout. Also, Moderna having its biggest move in 2 months, so big move, up more than 8%. It was up more than 17% at its highs today, so pretty significant. Top in the S&P 500, NASDAQ. I love this story. Surging as Merck ramps up its collaboration with the company on a cancer vaccine. So Moderna is going to get about $250 million from Merck in exchange for joint development and future commercialization of a vaccine that's currently in mid-stage clinical trials. This is all about an RNA cancer vaccine. So really love this story. And then do want to mention Norwegian Cruise Line. The cruise lines were like top in the S&P 500. So Norwegian, Carnival, Royal Caribbean, cruise lines all rallying after UBS upgraded Norwegian to a buy from neutral. He likes the overall cruise industry. He's overweight, but he did cut his price target on Norwegian to 15 from $18. But nonetheless, Norwegian, as I mentioned, up almost 12% in today's session.
Okay, you got the gainers, Carol. I got the decliners. Albemarle finishing the day down by 7.9%. Lithium stocks getting hit today, led by declines in this company after Morgan Stanley flagged a drop in volumes and prices. This is because Chile September customs data showed a drop in lithium prices in China to $55 from $70 per ton. That's according to a report written by analysts at Morgan Stanley. And then the second worst performer in the S&P 500, T. Rowe Price today. Shares slumping after the asset manager reported a 24% drop in assets under management versus the same period last year. T. Rowe finishing the day down by 5.1%. And Blue Apron down for an 8th day in a row, another 8.6% today, losing more than 62% just over the last 8 days. The stock cannot catch a break.
It cannot. When food inflation is hitting in, but maybe the likes of Pepsi can pass it on. Let's look at inflationary pressures from commodities perspective right now. We're actually dialing back a little bit in the oil market with WTI crude down 2.5%. Brent was off by more than 2%. This more about the world concerns, the recessionary pressure, the idea of a global slowdown, maybe taking away some of the 17% rally that we saw last week. Natural gas is also a little bit lower. I wish I had aluminium up here, of course, aluminum as you might call it. But of course, the focus in the US being that maybe we could see some retaliatory efforts on Russian metals coming into the US. And what does that mean for prices overall? We're seeing foreign exchange, again, super volatile at the moment. While we see the VIX still languishing at about a 33, Forex really where it is, and a British pound that strengthens by more than a percentage point, the Bank of England moving in to try and stabilize the bond market. Meanwhile, the Japanese yen weakening by 0.7%, a 24-year low, when we will see yet further actually efficient intervention coming from Japan to be able to stabilize versus a never-endingly strong US dollar. Overall, we are seeing the Canadian dollar, loonie weaken a little bit, maybe in line with oil markets. Sovereign bonds, very mixed picture, as I say, the BOE doing its job, managing to pull down the yields on the 2-year, very much on the front end, but also on the long end too, Taylor. But it took a while to get there. They raised past 5% on that long end debt before they stepped in.
We are getting some global comments as well, Caroline, from Treasury Secretary Janet Yellen, giving some prepared remarks in Washington. And I think what's interesting is she says that they are attentive to some of the global repercussions of the Fed's policies, saying that priority, of course, is curbing inflation, and that starts with a strong market, and you have to, of course, focus on some of those domestic tasks, but really well aware of some of the global ramifications that are underway.
Aware, but what are they doing? I mean, there have been a lot of people...
Yet.
Well, but hang on. There's been a lot of people who have made the argument that what we're trying to fight now with regards to supply-side inflation is much more of a task for people like Janet Yellen, folks at the Treasury, folks in the White House, folks in Congress, and not necessarily put it all on the shoulders of Jay Powell and the Fed.
We'll wrap up quickly just some of these bond yields.
Did you have
I know
more
that
to
they're
do?
no, it's okay. Yields are falling, not much new there. We know we're sort of in a decent trading pattern here, of course, ahead of CPI as we wrap up PPI. But Carol, Romaine brings up a good point about the intersection of monetary versus fiscal policy and who needs to do what.
Well, most would say and argue, like we've talked about this a lot with Jay Powell of the Federal Reserve, global central bankers, they can't fix supply chains. You know, they certainly can raise rates, and we've seen it in certainly the mortgage market and the housing market.
Sorry, I'm just going to interrupt
What?
you, Carol. Sorry, we
What?
have some breaking news.
Oh.
Just to go back to the fundamentals here. Applied Materials, the big chip maker, announcing that it's actually cutting its forecast here. Again, we weren't expected to get actual results out of them for a few more weeks here, but they are trimming their forecast here going forward. And this is really the drumbeat here. We'll dive into these numbers as soon as we can get a better sense of them. But it gets to the broader theme here that we are dealing with the world that for a lot of folks needs to contract a little bit. It's not just about inflation and the Fed. It is about some of these companies and their own customers.
Well, there's a lot of play when it comes to the semiconductor industry. AMAT, by the way, down about 2.5% here in the after hours. We know it's the macro, concerns about slowing. We're concerns about regulations coming out of the United States when it comes to dealing with China
in the
specifically.
release, they're saying that the cut in their fourth quarter business outlook reflects the impact of new export regulations, partially offset by supply chain performance improvements. $6.4 billion, that's the number they're looking for the fourth quarter. That's down from a forecast of about $6.65
And they
billion.
do say they're trying. They say they're pursuing additional export licenses and authorizations where needed. And this is going to be the devil in the detail of how much the administration allows any sort of loopholes. But really, they say it's a global business with customers, suppliers, and operations located in many countries around the world. This is an impact of trade regulations at the moment. They said they're committed to complying with them.
This is the EPS, we should just point out, 154 to 178. That's the new range that they're giving for the fourth quarter. That's down from 182 to 218, so a pretty big cut in that EPS number as well.
Yeah, this is all based on the U.S. government announcing last week new export regulations. I mean, this is the press release is just about this. The company's saying Applied currently estimates that the new regulations are going to reduce its fourth quarter net sales by approximately $400 million, plus or minus $150 million.
And how long does it take before we start to see announcements from some of the other chip makers like this?
Yeah, and already the pain being felt. Just remember the scoop coming from Mark Gurman, the PC slowdown already impacting Intel, the loss of jobs that are likely to come from sales and marketing. We've just seen headline after headline of how poor the market is for semiconductor makers, equipment makers as well, and then you add on a layer of geopolitical risk, it's just never ending.
AMAT cutting its forecast. We are seeing the stock down in the after hours. Also in the press release saying that they expect the impact net sales in the first quarter of fiscal 2023 by a similar amount as in the current quarter. So this is going to weigh on the company for some time. All right, guys. That's a wrap. The headlines continue to come fast and furiously. We will continue, of course, our cross-platform coverage tomorrow on radio, TV, YouTube. We will count you down to the close, same time, same place tomorrow.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, folks, we are watching AMAT shares in the after hours, seeing some selling. This after the company cuts their forecast. Fourth quarter net sales about $6.4 billion, plus or minus $250 million. Fourth quarter adjusted EPS $1.54 to 178. They had seen 182 to 218, and this has to do with the new U.S. curbs that were imposed by President Biden on Friday against China.
The last paragraph of this press release really sticking out. Applied's business depends on international trade, and the company is committed to complying with all applicable trade regulations. Let's get to Washington, D.C. now for world and national news. Nancy Lyons standing by in our 99.1 studio. Hey, Nance.
Thanks, Tim. A jury in Waterbury, Connecticut says Alex Jones should pay $965 million to 8 Sandy Hook families for lying about the school massacre on his InfoWars talk show. Jones said the families had participated in a hoax. In the wake of indiscriminate Russian bombardment of Ukrainian cities, the 50 nations that provide military aid are vowing to help augment air defenses. Bloomberg's Irv Chapman has more on today's meeting of NATO defense leaders.
Defense Secretary Lloyd Austin said after the meeting,
The systems will be provided as fast as we can physically get them there. We're also going to provide additional munitions to the existing systems that the Ukrainian forces are using.
Chairman of the Joint Chiefs, General Mark Milley, explained,
What Ukraine is asking for is an integrated air missile defense system. So that doesn't control all the airspace over Ukraine, but they're designed to control priority targets that Ukraine needs to protect.
They added that older weapons like Patriot will be sent by countries that have them and singled out Germany for contributing an advanced system. In Washington, Irv Chapman, Bloomberg Radio.
What is expected to be the final hearing for the House committee investigating January 6th will be held tomorrow. And former Watergate prosecutor Nick Ackerman tells Bloomberg he expects the committee to reveal some surprise connections.
We're going to learn about what did Donald Trump know about the people up on the Capitol that day. And what was he told, and how much did he know about that?
Ackerman believes we'll see links between former President Trump and extremist groups. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
All right, Nancy, thank you so much. Nancy Lyons in our 99.1 newsroom in Washington, D.C. You are listening and watching Bloomberg Business Week on this Wednesday, and great story by our Bloomberg News team. And it talks about Russia's President Vladimir Putin saying any energy infrastructure in the world is at risk after the explosions on the Nord Stream gas pipelines.
The attacks were an act of terror that set the, quote, most dangerous precedent, the Russian president telling a Moscow Energy Forum on Wednesday. Quote, it shows that any critically important object of transport, energy, or utilities infrastructure is under threat, end quote, irrespective of where it is located or by whom it is managed, he said.
Now, the president of Russia, Vladimir Putin, blaming the sabotage on the United States, Ukraine, and Poland, calling them beneficiaries of the blast that caused major gas leaks in the Baltic Sea. I'm sure you've all seen the bubbling pictures of that pipeline in the Baltic. The U.S. and its allies have rejected those allegations and suggest Russia may have actually been behind the underwater blasts.
The attacks on 2 strings of Nord Stream and 1 string of Nord Stream 2 at the end of September have raised concerns over the future of Europe's gas supplies. Other critical infrastructure in the region has also suffered damage in recent weeks.
You know, net, the big macro story, we've been talking about it for months now, and this is a result of the Russian invasion and war in Ukraine, is, you know, we're watching the global energy supplies being impacted. Russia, such a big supplier, right, specifically to the European region, and they are rethinking about, you know, where do we get energy going forward? And we've got a story coming up by our Bloomberg News team that looks specifically about energy policy here in the United States.
Yes, well, that has been, or energy, I should say, delivery has been completely reshaped over the last 6 months as this war has dragged on, and the U.S. increasingly becoming a source of energy for the continent.
And, you know, when we talk about one of the big macro factors, we had a guest on, actually I think it was our Tom Orlick, you know, there's questions about if it's a warmer winter in Europe, that'll be better in terms of pressures, inflationary pressures because of access to energy or high energy costs. But these are just one of the big macro factors at play when we look at the global economic outlook and what it means for global monetary policy. You are listening and watching Bloomberg Business Week. Carol Massar, Tim Stanovic, and this is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We're keeping an eye on shares of Applied Materials. As you heard Carol and Tim tell us, Applied Materials cutting its forecast, guiding lower because of those new U.S. export restrictions on China. It has cut its fourth quarter adjusted EPS guidance to a range of $1.54 to $1.78. Had seen a range of $1.82 to $2.18. Also sees fourth quarter net sales at about $6.4 billion, plus or minus $250 million. Had seen $6.65 billion, plus or minus $400 million. Key takeaway, Applied Materials guiding lower after hours, down now by about 1.2%. Turned out to be a down day on Wall Street. The Dow, the S&P, and NASDAQ moving lower today. Investors bracing for tomorrow morning's reading on consumer prices. S&P dropping 11 points, down by about 0.3%. The Dow down 28, drop there of 0.1%. NASDAQ down 9, a drop there of 0.1%. 10-year yield 3.89%. 2-year yield 4.28%. Spot gold 16.74 the ounce, up 0.5%, and West Texas Intermediate crude down 2.6%, 87.04 a barrel. Again, recapping, Applied Materials cutting its forecast, shares lower after hours, down now by about 1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, another story in the upcoming new double issue of Bloomberg Business we got tomorrow online and on the Bloomberg is about how President Biden is walking a tightrope as the world hungers for U.S. oil and gas. Really plays into the story we just talked about with President Putin and certainly his moves over in Europe.
We're talking about a wave of what's known as resource nationalism, and it goes beyond just energy. Writing about this in Bloomberg Business Week is Jennifer Deloe, energy and environmental policy reporter for Bloomberg News. She's in our 99.1 studio in Washington, D.C. Jennifer, good to have you with us this afternoon. It's a tightrope that the Biden administration has to walk right now, as you write in your headline here. Explain what resource nationalism is and how the U.S. is walking this tightrope.
Well, really, we're seeing this kind of resource nationalism across the world as countries look to meet the needs of their own consumers and amid inflationary pressures, and then also take care of other geopolitical concerns. In the case of the U.S. and the Biden administration, really, the concern is around energy. The president is feeling tremendous pressure to help European allies deal with energy needs, especially ahead of this winter and next year, because of the Ukraine crisis and energy concerns that have been exacerbated by that situation. But at the same time, he's also trying to deal with domestic needs and concerns by American consumers that the price of food and energy is going up. Of course, they're dealing with, gasoline prices that are increasing, and in the Northeast U.S., there are concerns about home heating oil this winter. So, for this president, it's really a matter of balancing these geopolitical concerns with very real domestic economic concerns.
Jennifer, it's a U.S. story, but it's also a global story. I think go back to the spring of, was it this year? And I feel like even last year when India banned some exports of wheat, citing a risk to its food security, partly due to the war in Ukraine. I guess it was earlier this year. I mean, this is, commodities or fossil fuels. People remind us it's a fixed amount, right? At some point, we're all going to be competing for the same stuff unless we shift to alternative modes.
Right, that's absolutely true. Other examples, palm oil, Indonesia, beans in Mexico. It's far bigger than just energy. Energy just happens to be, in America, in the United States, it happens to be just such a big political and economic pressure point, a big contributor to inflation. And of course, America is an energy superpower. We are a large supplier of oil and gas to the world, and right now that puts the president in a really unique spot. Interestingly, some of the bid to control the exports and the outflows of these products might not necessarily have the economic impact that American consumers want, but that's part of the calculus that the White House is weighing right now.
Can you talk a little bit about that, like what difference it would actually make if they were to curb some of these exports?
Right. So the consideration is curbing really petroleum product exports, gasoline or diesel, not actually crude oil. And that's a live discussion right now within the administration. It would have a mixed impact, and it would not necessarily reduce prices across the country. In fact, some areas of the country would see gasoline and diesel price increases. So the Gulf Coast and the Midwest of the U.S., which is flush with refineries, would end up being flush with product. So gasoline prices would likely decrease if you were to clamp down on exports of that product. But some areas of the country that are really restricted and don't have enough domestic supply coming in, who are reliant on imports to meet their needs, which includes New England as well as the West Coast, those areas would likely see price increases. That's something that we're hearing universally from analysts and energy experts. So, you know, this might look good. It might be a positive move to some constituents, but the economic realities just don't seem to support it.
All right, so what's likely, because this is tricky, right? Certainly the United States, when it comes to energy, has to think about its own citizens, but it's also got some allies out there that are very important. And what happens globally, it certainly doesn't want instability because of, you know, an inability for various citizens around the world to access things like fuel and energy. So what's the strategy that the U.S. is likely to pursue?
Well, we know that the administration is going to continue to turn to the Strategic Petroleum Reserve, where they have already tapped, you know, U.S. stockpiles of crude in a bid to keep the market in balance and to keep prices down. The Biden administration unleashed an unprecedented release of those crude reserves in spring of this year, and still has some latitude to draw down barrels and release those onto the market. So that's something we're going to keep seeing in the coming months. And they're going to keep exploring some of these other creative options, whether it's limiting exports or perhaps requiring refineries to hold more stockpiles in the U.S. And that's really a bid to deal with not just the price concern, but also a very real concern about stockpiles of domestic stockpiles of fuel being at incredibly low levels heading into winter, and particularly in New England, where home heating oil and diesel supplies are at historic lows.
In the meantime, we see gas prices right now at $3.92 on average. That's coming from the Automobile Association of America, AAA. Still, though, higher by more than 6% from the lows earlier this month. And Jennifer, I'm wondering about these continuing to climb higher just before the midterm season. We have 20 seconds left.
Yeah, huge political concern and headache for the administration. You know, prices hit their high in June, but the fact that they're going up, and they're going up significantly on the West Coast, it's a real political concern for this White House.
Super smart story. Jennifer Deloe, she is energy and environmental policy reporter at Bloomberg News in our 99.1 studio in Washington, D.C., right? With everything going on, like this is really, you know, what it's about ultimately. All right, you're listening and watching Bloomberg Business Week on Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Well, Mark Zuckerberg has his legs in the metaverse.
He does. He and one other person. You know, you got to be controlling shareholder of Meta Platforms to get legs in the metaverse.
Apparently, legs are really hard.
Yeah.
In the metaverse.
I mean, what
Virtual
Facebook
reality
is doing
systems.
is really hard, and investors are punishing it for it.
All right, we're going to talk about the virtual society. We've got a great guest coming up, author of a new book, also runs his own company. It is called
Improbable.
So we're going to get to him in just a moment. First up, though, back to your top business story. Some of the news after the close, and Charlie Pellet.
Indeed, it's a story you guys broke roughly 20 minutes ago. Applied Materials, we're watching that stock. It is down now by just about 1.85%. Applied, AMAT is the biggest maker of chip manufacturing equipment. It has slashed its forecast for the fourth quarter, saying new export regulations will hurt its sales to China. The company estimates that rules will reduce sales by about $400 million in the period. Again, Applied Materials after hours now lower by just about 1.8%. Turned out to be a down day for the Dow, the S&P, and NASDAQ. If you had tuned in throughout the day, you would have told us you would have heard us tell you that stocks were higher. In the end, though, late day fade and a move lower. S&P down 11, drop there of 0.3%. The Dow down 28, a decline today of 0.1%. NASDAQ lower by 9, a drop there of 0.1%. Stocks ended little changed. A brief afternoon advance faded as investors brace for tomorrow morning's reading on consumer prices. Now, what about the market backdrop? What about the Federal Reserve? Victoria Green is Chief Investment Officer at G Squared Private Wealth, and she was our guest right here on Bloomberg Business Week.
Too early for a pivot. I actually have been saying the pivot is dead. So everybody that's hopeful for a pivot is like wishing for like that sold out toy on Christmas. I really don't think you're going to get it. Like, I'm sorry. I wish I had better news, but I don't think it's coming.
And right now we do have the 10-year yielding 3.89%, 2-year yielding of 4.28%, spot gold up 0.4%, $16.72 the ounce, West Texas Intermediate crude down 2.5%, $87.11 a barrel. After the bell, we heard from Duck Creek, and it is forecasting revenue for 2023. The guidance did beat the average analyst estimate. Duck Creek right now is trading unchanged. Again, just revisiting Applied Materials, slashing its forecast for the fourth quarter. Shares after hours down by about 1.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, Meta Platforms analysts, they are mixed on the Facebook parent after hosted an event yesterday where it detailed its virtual reality initiatives and unveiled a new headset. Firms write that the company is making progress with its metaverse vision, but that it remains risky and that other issues continue to weigh on the stock, like legs. No.
Like legs. And like I said, Carol, investors have just beaten this company up over the last year as it has made this pivot, down 62% just year to date. We've got a great guest with us this afternoon. Herman Narula is the co-founder and CEO of Improbable, also the author of the book Virtual Society, the Metaverse and the New Frontiers of Human Experience. Herman joins us via Zoom from London. Herman, how are you?
Really good. Thanks so much for having me on the show.
Well, thanks so much for joining us. I want to say you're joining us kind of like old school right now, right? You're on Zoom and, you know, we're here in person. Is there a possibility that in the near future we're going to be doing this interview in the metaverse?
Oh, absolutely. And I think the cool part about it isn't so much whether we'd be having a VR headset or a phone or whatever. It's that we could have thousands of the listeners there with us and actually interact with them. That's the part of the metaverse that I'm excited by, which I don't think companies like Meta are even working on.
Herman, the problem is I don't like people, so I don't want to.
Well, I was
I'm just kidding. I'm
you
just
should see
kidding.
What these people, you should see what some of these people say to Carol on Twitter. I don't know if you want them in the metaverse with you, Carol.
I mean, if you're saying that, if you're confessing that you don't love your listeners, that's a big.
I do. I'm just having some fun with you. No, but I think we're trying to get a grasp of, you know, how the metaverse, everybody's been weighing in, how it impacts our life. It feels like it's a long time off. Your company, you are a creator of virtual world technology. You're in it, but you also know it's not an easy thing. So talk to us a little bit about the journey that we should all expect as we move potentially through to the metaverse and through the metaverse.
I think it's coming up sooner than we might think. We're already doing partnerships that enable thousands of people to come together in virtual events for sports, for fashion, for music. If you're thinking about VR headsets, that's a very, very narrow, even niche part of what the larger metaverse opportunity represents. The larger opportunity is something like getting a cricket fan in India on a 3G phone to have their first ever trip to a real stadium with thousands of people speaking and chanting and being together. These are the really interesting revenue and community opportunities in the metaverse. And in my book, I talk a lot about how...
Well, Herman, what does that look like from a hardware perspective? If they have a 3G phone and they're using their smartphone to enter the metaverse, like how is that different than watching this on YouTube?
It's all about the presence and the opportunities within that world. So the difference is the stuff happening in the world. And this is what I think Meta has kind of obscured a lot. How you consume the world is not as interesting as what the world is about. It's the ability to host thousands of people, have complex, rich virtual worlds, which require the processing, not of thousands or millions of messages, but billions of messages on the back end. It's that back end problem that is the real problem in enabling virtual worlds. Like, to use an analogy, in the early days of the computer, everybody thought the hardware was where the money was. But Microsoft sold operating systems, one of the first software companies in the world. They captured all the margin and all the profit. The value wasn't in the hardware. I think VR headsets are just another commodity device that is going to add value to the conversation, but the real money and the real opportunity is in taking real-world communities, bringing them into virtual space, and using the sale of digital assets and complex virtual worlds to enable that. And I've been on a 10-year technology journey to get there. That's where I think the value lies.
Herman, why is it, though, so important that I've got an avatar in a room with other people, even if it's a lot of people? Why is that so important, and how does that kind of advance society and how we get things done or how we do things?
It's all about what I would call the fulfillment economy. And I cover this a lot in my book. So everybody needs fulfilling interactive experiences, not just for their mental health and their well-being, but as a form of self-actualization. This is a well-understood area of psychology. So when you go to a sporting stadium, or you play a computer game, or you play a round of golf, you're not just having fun, you're actually being fulfilled. You're having a very important need met. And the more we can allow people to have fulfilling experiences, the better their lives become. And frankly, the more money they're going to spend on, the important aspects of realizing that fulfillment.
But how is the metaverse going to feel the same of me watching or being at a game versus me actually being at the game? And we only get about 30 seconds, then we'll come back and talk some more. But how is that? I don't know.
It's all about your ability to express yourself. Imagine the idea of bringing thousands of fans, not just into the world, but in a way where they can have a two-way conversation with a performer or a celebrity or somebody that they could never meet or engage with in the real world. Communities are very one-way right now. And a lot of brands and companies make a ton of money, but leave a lot of money on the table because they can't have that interaction.
All right, we got lots more to come. Herman, sit tight for a second. We'll come back to you in just a moment. Herman Narula, co-founder and chief executive officer of Improbable. It's a UK creator of virtual world technology, a SoftBank-backed company. His new book is Virtual Society, the Metaverse and the New Frontiers of Human Experience. We'll get back to him where he is in London in just a moment.
Let's get to world and national news. Nancy Lyons is standing by in D.C. Hey, Nance.
Thanks, Tim. A Connecticut jury is ordering Alex Jones to pay nearly $1 billion to multiple families of Sandy Hook survivors. The InfoWars host and conspiracy theorist had already been found liable in a Texas court over his repeated claims that the 2012 Sandy Hook school massacre was a hoax. The plaintiffs allege that Jones made millions of dollars off those claims and caused his followers to torment the families of the victims. The House January 6th committee is getting ready for what may be its final public hearing tomorrow.
The panel is expected to focus on repeated warnings former President Donald Trump received about the threat of violence ahead of the attack on the Capitol. Sources tell the Washington Post the committee will present new video footage and internal Secret Service emails that may corroborate parts of former White House aide Cassidy Hutchinson's testimony. She told the committee in June that the former president was told some of his supporters were armed and that he clashed with Secret Service agents who insisted he stay away from the march to the Capitol. In Washington, I'm Nathan Hager, Bloomberg Radio.
Democratic senators are pushing for the U.S. to temporarily pause arms sales to Saudi Arabia after OPEC Plus moved to slash oil production by 2 million barrels a day. Experts say that could send gas prices higher around the world. Senator Richard Blumenthal of Connecticut says the Saudis don't deserve our help.
We are selling highly sensitive, advanced technology to a country that has aligned itself with an adversary, Russia, that is committing terrorist war crimes.
Blumenthal says the Saudis need to restore trust with the U.S. Global news 24 hours a day on air and on Bloomberg Quick Take.
All right, Nance, thank you so much. We're going to get back to Herman Narula, co-founder and CEO of Improbable, and we're talking about his book, Virtual Society. We'll get back to him in just a moment. In the meantime, we have an interesting story about Microsoft.
Yeah, the company's going to introduce an app to help employees and managers in a hybrid workplace decide what's the right time to go into the office. This is a really interesting move from Microsoft because this is a company that has, a really good connection with a lot of Fortune 500 companies who use their products, right?
Yeah.
Microsoft Teams, Microsoft Word, Microsoft Excel.
Which allows you to work remotely, right?
Microsoft Outlook.
Yeah.
Exactly. So they can add a tool that essentially allows users to know when a large number of their coworkers are planning to be in the office or attend a meeting in person.
It's the Uberization of the world. All right, so the app, apparently this new Microsoft Places app will let users know when a large number of their coworkers plan to be in the office or attend a meeting in person. The app also shows when a workspace is likely to be pretty empty to help managers make decisions about electricity, heating, and cooling that can save money. For example, as Europe looks to a winter or fuel and electricity shortages, which we just kind of talked about with our own Bloomberg reporter, companies are seeking tools like this. Microsoft VP Jared Spataro, who's been a guest on our show, he said that in an interview.
So one thing that I'm thinking about is the way that companies are deciding that everybody has to be in the office on certain days, right? You see it on the subway. Wednesday is definitely one of those days. On Wednesdays, the subway is absolutely packed. Same with, my wife's company, right? She's actually going in on certain days, and a lot of people work from home on Mondays and Fridays. So I don't know if you need necessarily that type of granular information.
I guess,
if you know the days that people are going to be there. I understand it from a cost savings perspective when you're thinking about resources like electricity and heating. But it does seem like individual teams kind of have to get on the same page about this stuff ahead of time.
I guess it's just if a company chooses to work differently and maybe they want to scale down on their office space, so maybe this is a way of saying we can't have everybody in, or I don't know, if it's really hot and there's electricity surges or something, maybe like more of you work at home. I don't know.
Use the AC at home, not at the office.
It doesn't really matter. We're all going to be in the metaverse someday anyway.
That's true.
My avatar. That's all. As long as I got legs, that's all I care. This is Bloom.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Applied Materials has cut its forecast. It is blaming export curbs to China. Applied is the biggest maker of chip manufacturing equipment after ours. Applied shares trading lower now by about 1.7%. Turned out to be a down day for the Dow, the S&P, and NASDAQ. Stocks spent much of the day in the green, but by the time it was all over, another losing day for the S&P 500 index, down now 6 in a row. S&P down 11, dropped there of 0.1%. We had the Dow Jones Industrial Average also down 0.1%, lower by 28 points. NASDAQ down 9, a drop there of 0.1%. 10-year yield 3.89%. The 2-year 4.28%. Spot gold up 0.4%. 16.72 the ounce. West Texas Intermediate crude down 2.6%. 87.02 a barrel. So the S&P slipped into the red in the final few minutes of trading. Again, to be clear, the S&P today was down by 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right. Thank you so much, Charlie. Back to Herman Narula we go, co-founder and CEO of Improbable, as we mentioned, a creator of virtual world technology. And we are talking about his new book, Virtual Society, the Metaverse and the New Frontiers of Human Experience. He is still with us via Zoom from London. Well, I got to say, we do have a little soft spot from you because you do cite some Bloomberg intelligence data in your book jacket, which recently predicted that the metaverse will become an $800 billion industry by 2024. How should we be thinking, though? Like, let's blow out the box. Let's just kind of go anywhere. So give us, on an average day, what the metaverse will mean for us.
I think it's going to mean that a bunch of people have jobs as virtual performers, content creators, entertainers, service professionals inside virtual worlds. I think you're going to interact with communities, with celebrities, with education inside rich virtual experiences. And I think for a lot of kids, it's going to be more than just entertainment. It's going to be a kind of vital part of their social lives and of the way they interact with people. And it's kind of a growing up of video games, taking them from being just pure play entertainment to a really connected part of the world.
Is this a good thing, Herman? You know, it's like when you're a kid, your parents only let you watch a half hour of TV a day or something, or you can only play video games, tell you to go play outside, stuff like that. How do we think about this in the context of, not actually socializing in real life?
So I talk a lot about this in the book. Nobody's done a deep dive on the psychology, the economics, the sociology, which I try to do in virtual society. And talking to experts, the conclusion I've come to is that a friend you make online is still a friend. A job you have in virtual space is still a job. And an amazing adventure you go on can enrich your life. It doesn't have to be kind of in the quote unquote real world. And also, frankly, a lot of our lives aren't that real right now. I mean, if you've ever cried over your sports team or wondered how irrational the stock market is, our existence is already one of rich other realities. The metaverse is just the next phase in that evolution.
Do you think Meta, is that the company that's going to set kind of the standard or the, what we all follow in terms of the development and build out of the metaverse, or not necessarily?
I think perhaps not. I don't know that Meta is going to be the sort of Apple of the metaverse. I think they're right now on track to be more like the Yahoo of the metaverse. The VR headset focus is a distraction from where real opportunity and value can come. And even if they're right about headsets, it's far from clear that that's going to be a premium, high margin product. I think most listeners here probably don't even know the make of that television set, for example. Yet we all have one. Whereas we do know the make of our phone. So I think there are a lot of lessons in the dot-com boom. There are a lot of lessons in the history and evolution of the internet. I try to cover them in my book as well.
So who ends up being the winner here?
That's the cool thing. I don't think it's going to be one company. I think that we're going to see networks of cooperative businesses highly and tightly integrated to create shared infrastructure using most likely Web3 or blockchain to share value.
How does that happen? How does that happen, though, in an environment where you have huge venture capital firms that also see opportunity here? Bloomberg Intelligence predicting, what, $800 billion, Carol?
Mm-hmm. Yeah.
Venture capital firms are going to want to go after that.
Where I'm putting my money where my mouth is, we've raised hundreds of millions of venture capital this year and put it into a decentralized network called M Squared. And the capitalists get tokens, but the network actually builds worlds, and those worlds become part of a shared interoperable network where users can move from one world to another. So I think, of course it'll attract investment. In actual fact, the real question here is how do we convince big brands, big companies to join the metaverse? Are they going to want to join a centrally controlled platform where their revenue is of a low quality and they have no direct access to users? Or are they savvy now? Do they want to own their own platforms? That's kind of my bet. I think big companies, brands, sports leagues, music rights holders, they want to share a stake now. That's what's propelled my company to profitability. It's been these businesses wanting to own a share of the metaverse rather than just be customers of it.
You are profitable?
Yeah, as we recently announced, we're projecting profitability this year.
And I saw a story too about you're close to another $100 million in new funding. Is that true? Is there any update?
Yeah, we are closing a new funding round led by an amazing company called Elrond. It's one of the pioneers in the blockchain space. And we're raising $100 million at a $3.2 billion valuation, which is great to do an up round in this climate.
But let me ask you something, Herman. I mean, you guys initially, right, were really into gaming, but you dropped that effort. Why the shift?
Actually, we're the world-leading provider of multiplayer expertise into over 60 different publishers. So we're quietly behind big shooter franchises. We built multiplayer mode of Fall Guys. We've never shifted. It's just that when it comes to the metaverse, which is based on interoperable, large-scale, rich virtual experiences, the people who've been biting our hands off are not our traditional gaming customers who are happy with their siloed experiences. It's big brands, it's companies, it's sports leagues. It's a new set of customers. That's taken us by surprise. That's what's propelled us so quickly to more revenue.
Can I ask you something only because Mauricio, who listens to Tim and I, watches us on YouTube, he says, so is Twitter a metaverse? Is Twitter a metaverse or could it be a metaverse?
Ooh, well, I would define a metaverse as follows. It's a network of meaning that exchanges value between multiple socially constructed realities. So to the extent that Twitter is another world and what happens in it isn't quite the real world, and there's a value exchange between the real world and Twitter, I would say in a sense it is a metaverse. I mean, in a way, Elon Musk is kind of like a pro wrestler playing a character on Twitter, creating value in this other world, and it directly affects the real world. It's very, very interesting when you think of it that way as a game.
I think he's the boss of that metaverse.
Yeah, I think so. I think he might be. I think he's now about to buy it. So there you go.
Hey, Herman, what about when it comes to making money in the metaverse? And you touched on this in the previous section of our interview in the context of getting more people into experiences. But I'm wondering if it's we hear about Decentraland and the challenges that Decentraland is facing, and buying real estate in the metaverse and those sorts of things. At the end of the day, is it just going to be ads like in our Instagram feed?
No, I think it's going to give us an entirely new business model, which is also why it's going to be challenging for traditional companies like Meta, who rely on ads to prosper. Video games don't make money primarily from ads. They make money from selling magic swords and customization options and cool things in the world. But the value of those things, like land, is proportional to the utility of them. And systems like Decentraland are very primitive. They only handle like a couple of people in the world at one time. If you want valuable real estate, like think of prime Manhattan real estate, it's got to be able to accommodate vast numbers of people. It's got to be central. It's got to have utility. And there are very hard technical challenges in enabling that type of scale. That's the secret set of problems that need to be solved to enable the metaverse. A number we like to think about is called operations per second. This is like the bandwidth of the metaverse or the CPU power of the metaverse of any particular world. And you need to be hitting billions of messages a second in order to be able to produce valuable worlds. And that's kind of what our company's been working on. We can now handle over 30,000 people in one world.
Herman, really quick, 15 seconds. If there's one company you would tell our audience that they should keep an eye on in connection with metaverse beyond yours, what would it be? Real quickly.
That's a really good question. I think Apple. I'm quite curious to see what they play in this space.
All right. Listen, really fun. Certainly blowing our mind a little bit on this Wednesday. Herman Narula, co-founder and chief executive officer of Improbable, joining us via Zoom from London. His book, Virtual Society, The Metaverse and the New Frontiers of Human Experience. Are you ready for the metaverse?
Nope.
Are you ready for your panel that's coming up?
Yeah, I got a panel coming up. Bloomberg Crypto from Bloomberg Invest. It's going to be great.
We'll include it in our weekend show.
That's right.
Looking forward to it. All right, everybody, have a great and safe evening. For Tim Stanovic, I'm Carol Massar and the whole Bloomberg Business Week team. This is Bloomberg Radio.